afternoon, everyone, and welcome to Stock Market Today. Ali Corm and Ed Carson here with a look at the action in today's session with losses of more than 1% across the board today, Ed, in the major indexes.
And we continue to slide down toward the January lows. Home Depot was a big negative for the Dow. A lot of bad moves in retailers. Planet Fitness is shaping up a little bit. Tesla went through a key support level today.
Yeah, not so much for Tesla. Okay, well, let's take a look at the technical levels to watch on the major indexes. So here's a look at the NASDAQ composite down over 1.2% today. We have the S&P 500 down 1%, the Dow Jones Industrial Average down 1.4%, and the Russell 2000 also down about 1.4%. So yeah, Ed, we're getting dangerously close to some levels on the downside that we are hoping to hold above, but where are we at right now?
Yeah, we're definitely getting much closer to those lows. I mean, a couple of days ago, we weren't that far away from our February highs. I mean, at least, which is something, but we're getting pretty far away from that. And it really wouldn't take much at all to drop that. It's really hard to know. We talk about, oh, the market rises on a wall of worry and there's plenty to worry about, but we've had a whirlwind of worry. How do you price in? We don't know what Russia's going to do and then how we're going to respond. And, there's a lot of things going in. You just don't know what might happen. That makes it very difficult to want to make big bets on the market until we get some sort of clarity, at least on this. It's hard to feel confident, and even if the market does go back up, I mean, we may end up being in a choppy situation. It doesn't mean we go straight up. So there's not much on the upside. Seems somewhat limited, or at least, whereas the downside, we break through here. I'm not quite sure what the next levels are. There's not a whole lot of obvious areas of support after we get below the January lows.
Yeah, that's right. So the NASDAQ closing today at 13,381.5 roughly. And this day one rally day low at 1394.65. So we'll be keeping a close eye on that. Let's also take a look at the S&P 500 here, Ed, with a loss of, once again, just about 1% here, closing the day at just over 4,300. The January 24th low here for the S&P, just over 4,200.
Yeah, I mean, and then we don't really care so much about closing prices, but it is the worst close in several months. I mean, just to point that out, we rebounded off of things, so we keep on weakening here, and it just there's not a lot of good action, and even some of the good action, like energy stocks, energy prices rose today, and energy stocks still fell, and they've been falling for the past few days. So it's hard to find any kind of safe haven right now. I mean, yeah, there's always a stock or two that rises, but it's just very difficult to play in this kind of environment.
Yeah, and to your point earlier about if we do start seeing a little bit of upward momentum, it could very well be short-lived. Even if we do see a stunning reversal like we saw in late January, it seems like at best, investors should be looking at short-term plays and only going in with smaller positions.
Yeah, I think that's definitely the way to go. I mean, we've had some one-day moves and then they fade out, or even some bigger moves like in that late January is where, there's not a whole lot of stocks to buy too. So it's not like you're missing out on great buying opportunities. So if you wait for real strength, that's why we normally wait for follow-through days. We're not quite at that stage, but you're almost there. I mean, you basically almost want to see some real confirmation, not just, oh, look, we rose for an hour or rose for a day. Yeah, there's just a lot of upside resistance, just a lot of reasons to be cautious right now.
All right, well, let's take a quick look at blue chips and small caps. So here's a look at the Dow down below that 34,000 level on its way down to the January lows. We also have a look at the Russell 2000 here with the IWM ETF taking a hit today, undercutting a trading range that it had been hanging around for the last couple of weeks.
Yeah, and the Russell about a week or so ago, hey, the small caps are coming up. Hey, they're moving up toward the 50-day line. And then it's just like, well, that's faded. I mean, they don't look any worse than anything else, but there was a minor bright spot there, and that's not there now.
All right. Well, let's take a look at some of the interesting movers today, starting off with Home Depot. Interesting for the wrong reason, I guess. Down about 8%, heavy volume on its earnings report, where we saw some decelerating growth on the bottom line, a slight uptick in top line growth at 11% here, Ed. But this is a pretty big breakdown below a key long-term level for Home Depot.
Yeah, you might have thought, hey, it's not, like we've talked about how high PE stocks run into trouble. Well, this one isn't. I mean, but that's not a panacea. There have been plenty of low PE stocks that have broken down. It was a really bad day for retail. Home Depot was a big part of that. This was one reason why the Dow was down more than the other major indexes. Their earnings were fine, but their guidance was not great. And I think analysts are worried that inflation and slowing demand will take a toll. And boy, it just came right in there, and that's not a good sign for retail in general. It's just this was, you could have argued, oh, it's holding on, maybe on, but this is why you wait. It's like, oh, maybe it's finding support, maybe sort of around the 200-day, maybe, but there's a lot of maybes that you have to have happen, and if you try to jump ahead of that, there's a lot of, well, maybe nots that come in, and this is, right ahead of earnings, just got smashed here.
Right. And it bears repeating that the strategy of buying stocks that take a big hit on earnings, even though the company itself might seem like a solid, strong company, you want to be focusing on that technical action because damage like this takes a lot of time to repair. So that's not a strategy that we like to use, Ed. We want to be looking where the strength is, not something that's cheaper now.
Yeah, that's absolutely true. Yeah, we're looking for strength, but everything looking pretty weak right now.
Yes, it is. Except what about Planet Fitness? Bulking up, strengthening here, but pulling back a little bit ahead of earnings, down about 1.6%. If we go on over to a weekly chart, we can see a base next to base forming. So all in all, some pretty tight action and a relative strength line that has held up very nicely in recent weeks.
Yeah, so that's sort of coming back after obviously very tough time, and it actually was struggling even before the COVID. But that was really tough. All the gyms being closed, and who wants to be around all the grimy equipment that everybody else is touching and all that? But that's the reopening plays. Cases are coming down, fears are coming down. So there's positives there. There's a cup base. It almost has a handle on a daily chart. So there's that, but that's not really changing the buy point that much in this case. So yeah, our earnings are coming up. This is our stock of the day. I'll be honest, we named it our stock of the day in part because it wasn't actionable. We didn't want to be telling people to buy stuff right now. I mean, the relative strength line is right at highs, and it fell almost 2%. There's a lot of those stocks today that fell 2%. I was thinking about Apple and some others where the action wasn't good today. They're absolute losers, but relative winners. And that's what you get in a market like this.
Yeah, that's exactly right. Well, we'll have to see what the earnings report says. That could potentially be a catalyst, but we want the market to cooperate, Ed. And one more thing about the annual numbers that we've talked about with other companies is, can it do better than it was doing before the pandemic? Well, the 2022 annual earnings estimate is above where it was, expected to be above where it was in 2019. So we'll have to see what management says on that call. And last but not least, let's take a look at Tesla, which had tested its 200-day line in late January, a successful test but today not quite successful, but it's right around that 800 level and above the low of this previous test, but it doesn't seem like it's on solid footing right here at this moment, Ed.
Yeah, obviously, if this stock rebounds, we'll all say in the past, it found support around the 200-day line.
Yeah.
So while it broke support, it wasn't decisive. This looks a lot like the market. It rebounded in late January. It tried to move up for a while, and now it's fading again. Obviously, the action down. Even the leading stocks, even the giant stocks, are largely going to move with the market. They may outpace it, they might lag it. As a mega cap, this will have an influence. I think it could psychologically have an impact if this one breaks down, because, okay, if this one breaks down, we'll think about all the other high PE stocks. And honestly, Tesla looks better than most of them. But if this breaks down, it's sort of like the market. Well, where is its next line of support? It's not entirely clear where it would stop. Now, it would stop at some point. But it's just not, there's just sort of a pretty steady trend down now over the last several weeks.
And, for those who have been in Tesla for a while, maybe since the beginning of the strong rally sparked after the coronavirus crash, they sat through this previous long base with support right around the 200-day or the 40-week. But it does seem like a key test that if it does have a decisive break, for long-term shareholders, that's something that we look at. We want to see that support around the 40-week line. So if it does have a severe deterioration, that could be a big signal for even those long-term shareholders said.
Yeah, I think so. I mean, I don't tend to have that kind of conviction in any stock, and so I would have gotten out long before. That's just my character. I know that. So obviously, people who weathered the storm with huge gains, they probably, it's not that bad. But yeah, you may want to think about it is a decisive break, because it didn't decisively just absolutely melt down below the 200-day line. So if it does that, you might at least want to start taking some profits. Again, everybody, you can have your conviction in these stocks, but sometimes in some of these winners, they go through their run. That doesn't mean Tesla's there, but you have to know that all these stocks will go through runs, and then maybe a long time before a lot of these leaders come back. But yeah, it's a tricky time. Obviously, this is why we like good markets. The decisions are easier. You're making money. You're selling winners. I mean, it's like losses don't happen. It's these kind of markets that are just tough. Even good decisions aren't fun decisions.
Such a good point there, Ed. And yeah, we've looked at some historical examples on IBD Live of exactly what you're describing, of a leader making a huge move and then taking a long rest. So we'll have to see what happens, but always good to keep that history in mind. All right, everyone. Well, thanks so much for tuning in today. Tomorrow morning on IBD Live, speaking of, we're going to be having Jason Thompson, a portfolio manager at O'Neill Global Advisors, as our special guest. So we very much hope you tune in. Looking forward to getting his updated perspective on what's going on in this market and how he's handling it. So make sure you tune in at investors.com/IBD Live. Thanks so much, everyone. We'll see you right back here tomorrow.